Welcome back to kind of a little market update that we wanted to come and give to you all because it's been some crazy times the last couple of weeks. So, Quint, what the heck is going on?
Hey, thanks, Logan. So obviously we had a wild ride on Wall Street Tuesday of this week. We're shooting this here at the end of Wednesday, and I think the Dow ended up down 1,300 points, one of the largest drops that we've seen all year. And really, what it was due to the latest CPI report. Now, this was shocking even to me. I'll be candid with you. I was really believing that we'd see a lower than anticipated CPI due to the components that make up CPI. In fact, I went so far as to write on Friday to everybody that we had seen a lot of signs that the market was pricing that in and that we could actually be seeing a new bull run.
Yeah.
Believe it or not, I don't think that's out of the question. I'll tell you why in just a second, but there was an outlier in there. And I know that we're not necessarily going to put up all of the data points, but if people were to look at the actual breakdown of the CPI, pretty much every headline number, oil, food, basic consumer goods and services that have been elevated significantly, both through the pandemic and due to the Ukraine-Russia war, were actually lower quite a bit. Even food was month over month lower than the previous month.
Right.
So that's what you want to see. But there was an outlier.
Yep.
And the outlier was in the CPI breakdown. It's called utility gas pipeline. And what that actually means is natural gas. And if you've been studying the news or you know anything about what's happening, one of the updates regarding the Russia and Ukraine and the Russian sort of retaliation on NATO supporting Ukraine has been them basically shutting down the Gazprom pipeline that provides natural gas to Europe. Now, they've been talking about having technical difficulties. There's issues with it. I mean, they've shut it down.
Yeah.
So natural gas prices have skyrocketed. In fact, year over year, they're up double. They were $5 a cubic barrel or however that's measured. Now they're pushing 10. But it was an outlier because after July, with natural gas coming in, just like oil and many other commodities, August saw a pretty significant increase to the tune of about 3.5. And I don't know if that's percentage points or how they actually measure that in the CPI for those variables, but it was enough to take the headline number a month over month back up from flat the previous month. Now, the reality is, and this is what I find so fascinating about Wall Street, we already know this, is we've now had our second month of year over year decline. So we went from 9.1 to 8.5 to 8.3. The problem is that everybody thought we'd be in the sevens by now,
right,
or even potentially lower. And foolishly, in hindsight, isn't that always the great thing? You have hindsight to learn from. I actually thought we'd even be less. And if we would have been less than anticipated, then that gives the Federal Reserve sort of the ability to back off a little bit from their rate hikes. At the start of yesterday, to start the day, there was only a 20 to 25% probability that the Fed would raise by a full 1% next rate meeting or next time they meet. Now that's at 50-50. And again, from a market perspective, and I'm kind of done getting frustrated by this because there's no point, but the Fed can raise rates all they want. That's not going to impact natural gas and what's going on in the Ukraine and Russian war, right, or how they're going to deal with that.
Like
pipeline.
You said, they don't care at this point.
At this point, it's headlines. Maybe they're just trying to make so many people angry that we have, tremendous voting difference in November. I genuinely don't know. But there's also something else that's going on. And this is, and I know that it's difficult to remain optimistic at all in this environment, but there are two things that are very interesting and worth noting. The first thing is pessimism, both just on a general scale of how do people feel, and that's measured a lot of different ways. That's measured by sentiment readings. There's literally polls that are taken, but there's also short interest, people who are betting against stocks, buying protection or insurance against stocks, betting outright. Those numbers are at historic levels. They are off the charts with how many people, institutions, hedge funds are betting against the market.
Yeah.
Usually, not always, usually that bodes well for the market. It's not a negative, but it's actually a positive. So pessimism.
Why is that pessimism and people betting against the market is generally good?
Usually the masses are wrong. That's why. Usually when everybody's as pessimistic as they are, it's an actual time to be a buyer. I mean, buy low, sell high, right? And usually when everything is good and everything is wonderful and everybody's, I mean, it's the same reason. I go back to this a year ago, last October, when we wrote raising the caution flag. And the primary reason we wrote that, not because of anything we saw in the market, but what we heard from people, what we heard from clients about wanting to take more risk, et cetera. That was concerning. But the second thing, and this might take a little bit more dialogue, someday maybe we'll do this, the composite, the S&P 500, the makeup of the S&P 500 is changing before our eyes. Over the last 10 plus years, the S&P 500 has done very well, as we all know, led primarily by a very small number of stocks because of their size.
Right.
Microsoft, Google, Apple, Amazon, Netflix, large companies that have done well and have propelled the market higher. Now those companies are falling out of favor, in part because they've gotten so darn big.
Right.
And it's hard to keep going at that rate, growing at that rate, being that large. Other companies are starting to emerge as new leaders. Companies that people probably have never heard of. Companies like On Semiconductor, Wolfspeed, Tesla, most people have heard of. Other sort of new technology companies that are involved in anything from biotechnology to green energy, et cetera. Now, many of those companies are actually doing quite well. They're trading near all-time highs. Many of them, Tesla, for instance, is above yesterday's low. I know it's a nuanced thing, and somebody says, well, who cares? Well, the fact that it's trading above yesterday's low tells us that that stock's in demand. The problem, Logan, is those stocks don't yet carry enough weight in the market to make a difference.
Right.
So it really is this big rotation. We knew it would come at some point when those big guys would fall out of favor and we'd have new guys emerging. It's going to be bumpy. It's going to be challenging. But I continue to contend that there are areas of the market right now that we are seeing that are going to transform industries in the future that will be household names in the next 10 years. And nobody knows who they are now. Now, as an index investor for accounts, that we manage, most people, we're not going to go out and buy these names. We're not going to go out and pinpoint and go, oh, let's pick up an XYZ or a company. We don't want to do that. But why is it encouraging to me? Because in 08 and 09, when everything fell apart, there was zero leadership. There was no new companies evolving. There was nothing emerging. There was nothing. Everything was falling apart. What we're seeing now, and it could change, anything is subject to change, but what we're seeing now is we're seeing money move out of certain areas and into other areas, new areas. That's a positive. So until further notice, I still stand by my belief that, we're starting to see things improve. Now, again, if inflation keeps soaring and the Fed keeps jacking rates and our government keeps spending money and we thrust into a deep recession, all that's off the table. but I still see leadership emerging out there, and that's a positive.
And the premise is that even though these stocks that have led us for the last 15 years are maybe see some pain, these new leaders will eventually lead the next bull market.
Yeah.
You know.
So good example. And in full disclosure, we own this in certain portfolios, but I'll give you an example. On Semiconductor, ticker symbol ON. This is not a recommendation, but I want to just give you an example. On Semiconductor is the largest manufacturer of semiconductors for automobiles. They've been struggling due to the chip shortage in automobiles, et cetera, but now they're starting to really significantly emerge because of the new demand. The chips are coming back online, et cetera. However, they are expanding dramatically into a chip, into an actual microchip that is developed through what's called silicon carbide. Now, silicon carbide, throw my physics hat, I guess, on here, but whatever. This is what I have learned about silicon carbide. It is a material that is used in this microchip that can conduct heat at significantly high levels used in electric vehicles.
Okay.
They are developing and growing their manufacturing in the United States, and they are going to be one of the predominant and only silicon carbide chip manufacturers with, and this is very important, full control of their supply chain. They are not outsourcing anything. And we know that that's been a huge problem. Okay, why do we care? Well, the company's doing really well. Again, we own it in certain portfolios, not a recommendation. But here's the example. They were just admitted to the S&P 500 just now. Not today, but like the last couple of weeks.
Right.
They were just admitted as a new company to the S&P 500. So if you own the S&P 500, you now own this company, except it's very, very small in comparison to what a Google has inside S&P 500.
Right.
So if this company continues to grow, which I think it will, and it grows in market cap size, ultimately it will impact the S&P 500 to a greater degree. But the larger companies have to sort of shrink, and the smaller companies have to grow for that rotation to occur. Thankfully, we have a behemoth up there called Tesla that is one of the larger companies that seems to want to lead us higher. Now, again, I know there's strong Tesla bulls, there's strong Tesla bears. I'm agnostic. I'm an Elon fan, I'm not going to lie. But it looks as if that wants to lead us into the sort of next phase and bring a lot of these electric vehicle type companies with it. We'll see.
Okay, great. Is there anything else you want to mention before?
Yeah, I mean, here's the deal, and I'll put a clip below, but I had a unique opportunity to go on CNBC yesterday and not talk about stocks at all, which I thought was kind of fun. At first, I got a little bit annoyed, but I looked back and I thought, that was fun because I got on and I was able to say, you got to take a deep breath. The volatility on a day-by-day basis right now is nauseating. It's exactly what I said on television. I said it's nauseating. However, when you take a step back and you look at the big picture, we've come a long way over the last several years. The markets are ugly right now. There's a sea change transpiring in a lot of areas, but there's still opportunity. And when it gets really ugly, as hard as it is, that's the time to put some capital to work. And I stand by that and always will.
Yeah. Okay. Good. Well, we're going to wrap it up there, and I hope you all have a good rest of your week. But we just want to give you a quick update.
Go Cats!